Hello friends, welcome back to our channel. If you are business owner, accountant, GST practitioner, finance professional or CA student, today's update could have a significant impact on your business. The GST Law Committee has reportedly recommended a major relief for taxpayers regarding input tax credit ITC. If approved by the GST Council, genuine buyers may no longer lose their ITC simply because their supplier failed to deposit GST with the government. What does this mean? Who will benefit? Will all GST notices be withdrawn? What precautions should businesses continue taking? Let us understand everything in simple language. So दोस्तों, before discussing the proposal, let's first understand ITC. Whenever you purchase goods or services for business purposes, you pay GST. Example, you purchase raw materials worth 1 lakh, GST 18%, 18,000. Total payment 1 lakh 18,000. Clear? The 18,000 GST paid can generally be claimed as input tax credit. When you sell finished goods, you collect GST from your customer. Suppose output GST 50,000, input GST 18,000, so GST payable is 32,000. This system avoids double taxation and is one of the key features of GST. So now let's discuss the issue faced by thousands of taxpayers. Imagine this situation: you purchase goods, you receive the invoice, goods are delivered, you pay the supplier through your bank account, everything appears correct. Months later, you receive a GST notice saying your supplier has not deposited GST with the government. Therefore, your ITC is reversed. Interest is payable. Penalty may also be applicable. Naturally, businesses ask, why should we be punished? We already paid GST to the supplier. We cannot force the supplier to deposit the tax. Still, under the current GST law, this situation can arise because of Section 16(2)(c). Section 16 of the GST Act lays down the condition for claiming ITC. One important condition is that the tax charged by the supplier must actually be paid to the government. This means even if goods are received, invoice is genuine, payment is made, business has acted honestly, ITC may still be questioned if the supplier defaults. This has led to numerous GST disputes across the country. Many businesses have had to spend considerable time and money responding to notices and pursuing litigation. Now comes the important update. The GST Law Committee has reportedly recommended a major change. If approved, a genuine buyer may not lose ITC merely because the supplier has failed to deposit GST. According to reports, the buyer would generally need to satisfy conditions such as the invoice is properly reported, invoice appears in GST 2B, payments has been made through banking channels or other prescribed modes, the purchase is genuine. If these conditions are satisfied, recovery action would primarily be taken against the defaulting supplier instead of the genuine purchaser. Please remember, this is still a proposal. It is not yet become law. Approval by the GST Council and subsequent legal amendments are still required. Let us understand with an example. ABC Manufacturing purchases steel worth 5 lakh, GST 18%, 90,000. Total payment 90,000. ABC receives goods, receives tax invoice, pays through bank, claims ITC, everything seems fine. Later, the supplier does not deposit 90,000 GST. Under the present law, the GST department may question or reverse ABC's ITC depending on the facts and applicable legal provisions. If the proposal is approved, ABC may be allowed to retain its ITC because it acted in good faith and fulfilled the prescribed condition. The recovery would mainly target the supplier who defaulted. This would provide much needed certainty and reduce disputes for compliant businesses. Until the law is officially amended, continue following all existing GST compliance requirements. Always reconcile GST 2B every month. Deal with compliant vendors. Verify supplier GST filings. Make payments through banking channels. Keep invoices and delivery documents safely. Maintain purchase orders and goods received records. Review vendor compliance before making major purchases. These practices will help protect your business during GST assessments. This proposal could become one of the most taxpayer-friendly GST reforms in recent years. If implemented, it would reduce unnecessary litigation, protect honest buyers, and improve confidence in the GST system. However, as of today, this is only a proposal. Continue following the current law until government officially notifies any change. If found this video useful, please like the video, share your views in the comments, share this video with your colleagues and business friends, subscribe the channel for the latest GST, income tax, accounts, finance and company law updates. Thank you for watching and I will see you in the next video. Thank you. Good night.